Hi, Natalie here from Best View Mortgages. So we specialise in equity release or lifetime mortgages. I personally do them myself. So if you wanted to book an appointment with me, it would be me that would either do a Zoom call, which is a bit like this, face to face, or I can come out and see you at a socially distanced place, either at our office, or I can come to your home if you're comfortable with me being in your home, and I can wear masks and all those sorts of things if you want me to. So there's lots of reasons to do lifetime mortgages. Now, they had a bit of bad press over the years, but they are highly regulated now, and even the compliance on our lifetime mortgages, every single case is now checked for the advice that's been given, so you can be rest assured that they're always being reviewed. Now, years ago, they were mainly roll-up mortgages, nothing flexible about them. They were high interest rates. They started to really eat into the equity of people's property, and there were some really bad ones about there. So for that reason, that's why they're regulated more now, and there's a lot more. So I think there is currently about 300 different types of equity release stroke lifetime mortgages. Now, as a lifetime mortgage advisor, we come out and see you. We do a fact find with you to establish what it is that you're trying to achieve. We make sure that you don't fit any other scenario. So if you're earning quite good money, whether that be pension money or you're still working or running a company, we double check that maybe an interest only mortgage might suit you, or a repayment mortgage up to your 95, because they do exist as well. So we like to make sure that it's what people definitely want, and also you're not being influenced by other third parties. So as much as we like to involve children, we also don't want them to be over influencing the older generation to try and make them release money out of their property unduly without checking the scenarios first. And that's why we always recommend legal advice. When you take legal advice, you need to check with the solicitor that they do give legal advice on lifetime and equity release mortgages, because not all solicitors do. And again, this is for your protection, to make sure you understand exactly what you're doing. So we go over all your income. We go over how much you want to raise, whether you want to buy somewhere, raise some money on your existing property. It might be that you want to pay your mortgage off. You can raise the money to have a massive holiday, buy a boat, what else? Home improvements, or you might want to do it to supplement pension income, because that's a lot of people do that. So these days, property is very much gone up in value, and a lot of people are asset rich and cash poor. So I've done a mortgage before. Somebody had a mortgage worth over £1 million, and their mortgage was only about 40,000, but they had £60,000 worth of credit card debt, because he'd not long been made redundant. They'd been living off the credit cards for a little while, thinking he would get another job. Obviously, they'd learnt to live a particular lifestyle, so they were struggling to keep up with that. Because their house was worth so much money, and they actually had no children, we established that they were happy to raise £100,000 on that house to pay off their mortgage and to pay off their credit card debt, and that's all gone, and they can carry on now just living off their pension income. And I think we did actually raise a little bit more to help supplement their income, so that they could live a fulfilment of life. And I've since found, so that was quite a few years ago, through keeping in touch with my clients, they actually downsized in the end and moved to the coast, and paid their mortgage off, which I think was only worth, probably about 125,000 when they paid it off. So they'd had it for quite a few years before they did eventually pay it off. So that just goes to show you they don't always eat into the equity, dependent on what type of lifetime mortgage that you want. So at the minute, you've got standard mortgages, which are interest only or repayment. Repayment mortgages, they can continue to age 95 for some lenders, because at the end of the day, if you've got a pension income, that is going to be a guaranteed income for the rest of your life. So lenders will lend on that basis. We've also got retirement interest only mortgages, so they are designed to go into retirement, and they are specific as to whether they suit you or not. And we have to double check, if there's two members of the family, so husband and wife, for example, if one party dies, they've got to prove that the other party's pension can still afford the mortgage payments. And then from there, if you don't fit either of them, we can then look at lifetime mortgages and interest equity release mortgages. And this gives you an example of whether you want to roll up the interest, which means that, say, the interest is £100 a month. Instead of paying it to the lender, you're going to add the £100 every month onto the debt of your mortgage. So if you borrowed, for example, £20,000 and the mortgage interest payment was 100, then next month it's going to be 20,100, 20,200, and so on. But every time the amount calculated is a new amount, the interest is calculated on that new amount. So provided we can get you good interest rates and that the rate of your value of your property carries on growing, and you haven't pulled too much out in the first instance, it is possible to still have a good amount of equity in your property at the end of your life that you can pass on to any beneficiaries should you have any. So in that, we like you to take independent legal advice. Obviously you need to check your tax position. Lifetime mortgages are quite good for negating some inheritance tax liabilities. They're a good way of raising money to give to family to help them buy their own property. You might want to give inheritance early if you've got a lot of equity in your property. The downside of them is you can actually be too young for them. The minimum age is 55, but if you want to, it depends on how much money you want to pull out of it. So at 55, obviously the amount you can pull out is a lot lower than if you were 95, because your chance of life or dying or going into long-term care is the longevity of it is quite far away. So they have to be careful that they don't give you too much money, because it could eat into your equity too quickly. Whereas if you're 95, the chances of living to your 110 maybe are quite low, and you can get around 50% out of your property quite easily. So again, it's all structured so that there's not as much risk of losing all your equity in your property, but majority of lenders belong to the SHIP scheme, which is to protect the equity in your home. And it means that there is a no negative equity guarantee. So no matter what happens, even if you live to 130, you will never owe, your estate will never owe more than the value of your house. Basically, the lenders are agreeing to take the hit if the debt does go above the value of your property. Other things to consider is that if you do have a lifetime mortgage, you have to look after the property really well. You have to keep it maintained, because at the end of the day, that property is, the lender wants to make sure it stays in a good state of repair. And also you have to let them know if you want anybody else to move in. So if you're in your 70s or 80s and you've unfortunately lost somebody, or you've divorced and you're planning on getting married again, be careful about having that person move into your house with you and get your lender's consent, because again, these are age-related properties and they don't like younger people moving in. It's not to say that they won't allow it, but you have to get permission. So otherwise it gets quite complicated as and when you do depart this world or go into long-term care. So if you'd like any advice or would like to give me a call for a quick chat, I can come around and see you or arrange a Zoom call at your convenience. So we look forward to talking to you. Speak to you soon. Bye bye.